On today's episode, we are going to take a look at Boeing. They just reported earnings this morning and the company is up 6%. So let's get started. Before we begin, guys, don't forget to hit that subscribe button and the bell. It helps the small channel out so much. And Tesla, Microsoft, and Facebook all reported earnings today after hours. And I'm hoping to get a video of all of them by the end of today. But make sure to post on the comments and let me know which company you guys want me to take a look at. All right, so first let's take a look at Boeing's stock price performance. If we take a look at early February compared to now, this company is down about 62%. And that's actually pretty crazy. This company has lost more than half of its valuation in less than 2 or 3 months, probably even less. Like I mentioned, this company right now reported earnings and they ended the day about a 6% day up due to earnings. All right, so now let's take a look at this company's earnings results. And this is for Q1 of 2020. Non-GAAP earnings per share was a loss of $1.70 and it ended up missing by 21 cents. GAAP earnings per share were a loss of $1.11 and it was a miss by 15 cents. Revenue was $16.9 billion and that was in line of what was expected, but that is 26.2% compared to the same time last year. So we're seeing that, right? There's a lot of factors hitting Boeing right now. The first one is the 737 MAX that has been grounded and has slowed down production in there. And the second is the whole coronavirus. And right, with the whole coronavirus, all these airlines have kind of halted their purchases, and some have even pushed some of their airline deliveries to further dates. Yesterday I took a look at Southwest earnings because they reported earnings yesterday morning, and Southwest is one of the biggest purchasers of 737 MAX from Boeing. And they said, hey, Boeing, can you push up the dates a little later? We don't need the planes right now. So that's a lot. These are the things affecting Boeing right now. Another thing as we're going to see is Boeing makes up revenue from different types of segment. One of that segment is security, national security. And due to the whole coronavirus, they do mention, and we're going to see, they have mentioned a bit of a slowdown in that sector as well. All right, so here we are on Boeing's earnings presentation that they gave us out this morning. And there's two things I want to show you guys from here. First, this is their commercial airplane production rate. And we can see they make different types of planes. 787, the 777, the 777X, the 737 MAX. You guys get the point. We can see that one of the things that Boeing needs to do is reduce its cash burn. Because of the slowdown in requests, they are also slowing down production. So we can see all these planes are seeing a decline for the next upcoming year. But one thing to be positive is Boeing at the moment says it has a total backlog of 5,000 commercial planes. That is insane. And I think that's one thing that a lot of investors are pretty bullish on Boeing for, is imagine if you have a 5,000 order backlog and you're only making like 100 planes per month. So you have enough backlog to have work for the next upcoming years. And next, like I mentioned, right, Boeing collects revenue from different sectors. Here they show us their 2019 revenue selection, and we can see a huge portion of it actually comes from commercial airplanes, which is 42%. So obviously, if commercial planes do take a big hit, it's going to be a big chunk for Boeing. But at the same time, 42%, there's still 48% elsewhere. 58, right? 58%. And let's see where that other 58% comes from. 34% comes from defense, space, and security. And I think that's a sector that it's still going to be pretty active at the moment. The next is 11% from government services. That's sometimes a little different from defense, space, and security, because sometimes that defense, space, and security only includes the delivery of the item or some research and development. Where government services, that's like, if some form of military branch has one of their planes, they probably have some form of services that, hey, every year or every 2 years, they do some updates, some services, and that's where that's coming from. And 13% comes from commercial services. And that's the same thing like I mentioned above, but it has to do with commercial planes. Revenue is split up pretty good in my opinion. Yes, 42% from commercial planes is a bit scary, but remember, that's not their whole line of revenue. All right, so before we take a look at this company's income statement and balance sheet, I pretty much want to talk about some other important information that was collected from their earnings result. First, Boeing says that it's working close with the FAA to make sure that the 737 MAX goes back to flying. Unfortunately, this is a song that we've been hearing for at least a year. But right now they're saying that they're expecting approval by the Q3 of 2020. They do mention that the MAX backlog has remained strong. So when they mean backlog, it means all the orders for the 737 MAX are still pretty strong. So there's still a nice amount of orders from there. And if you guys have been watching my previous episodes, I have done, I think, 2 episodes on airlines. I did one on Deltas and Southwest, who just reported earnings yesterday and last week. And one thing we do see is the slowdown in air traffic. Right now, United States air traffic is down 95% year to year, and airlines are pulling back dramatically. So it would take about 2 to 3 years to return to 2019 levels, and a few years longer to return to normal growth rate. So I wanted to see, hey, this company in 2019, 3 years from there was 2016. So I just wanted to see what this company's stock price was in 2016. In spring of 2016, which is where we're at, this company had a stock price of $130. And this company, I don't know, I just want to put that in perspective. I feel like this company is such in a stronger place than it was back in 2016, and to be sharing that same amount of price, I think it gives a little bullish segment to the company. One of the biggest news, and unfortunately one of the ways Boeing is going to cut back on expenses, is they're going to cut down the workforce by 10%, and most of that is going to come from commercial segments. Right now, Boeing is expected to be a smaller company, and it's going to be like that for some time. All right, so now let's take a look at this company's information that they provided during their earnings outside of the presentation. So we already talked a lot about these companies' highlights. One that we haven't mentioned is I did say that this company had a backlog of over 5,000 planes. That backlog of 5,000 planes means this company currently has an order of 5,000 planes that is still producing. That equals to $439 billion. And if we actually go back to the presentation, they have it broken down. Out of that $159 billion, $352 billion comes from commercial planes. Another $64 billion comes from defense, space, and security. So they have a lot of orders right now. Unfortunately, we are seeing some companies and some airlines are slowing down or pulling back on their orders. But when you have 5,000 plane orders, that's still a huge amount. All right, so next, let's take a look at this company's income statement. Let's first take a look at total revenue. So total revenue same time last year was $22.9 billion. This year was $16.9 billion. So about $6 billion less. And that's actually pretty scary to see that. Obviously, we talked about that's about a 23% loss in total revenue compared to the same time last year. But now in the income statement, I just pretty much wanted to see if anything else was throwing any red flags. Total cost and expense for the company ended up being about $2 billion less this year compared to the same time last year. And the major portion of that actually comes from cost of products. And that actually makes sense, right? If this company is making less planes, then obviously they're gonna spend less money on the item. So that's why we see about a $2 billion decrease in cost of products. The only other important thing I have highlighted here in the income statement is research and development. Research and development last year was $866 million. This year was $672 million. Normally, a company should be pretty happy to see expenses go down. But for some reason, I'm the type of guy that actually wants to see more money being used in research and development and expense. Of course, I'm gonna give it to a little bit in the bright side. Sometimes, especially big companies like Boeing, they spend too much money elsewhere, and they have to make tighter. They have to put their money pockets tighter to make sure their money is being used effectively. And that's what might have been happening here, where they reduced it, but it's more just they stopped throwing their money in trash and now are really just focusing on the main products. $672 million is still a crazy amount of money being spent on research and development in just one quarter. All right, next, let's take a look at this company's balance sheet. And let's start off with the assets. First, let's just jump right to the bottom and take a look at total current assets. Total current assets, and right now we're comparing to a quarter, just last quarter, not a year ago. So last quarter, this company had about $102 billion in total current assets. Now it's sitting at $111 billion. That's an increase of about $9 billion. A huge portion of that actually came from cash and cash equivalents. Last quarter, this company had $9.5 billion in cash and cash equivalents. Right now, it has $15 billion. So that's an increase of very close to $6 billion in there. And obviously, at the moment where we're at right now, it's just companies are just trying to build up their cash and cash allocations to make sure they're able to survive these uncertain times. Inventories is the other one that saw a nice increase of close to $3 billion. And these two being added ended up adding the whole $9 billion. Inventories increased by about $3.24 billion. And that, to me, unfortunately, I don't want to see inventories being increased, especially at such a high rate. But you have to understand, right? Companies, the production of planes has halted. So if they have halted, then of course the inventory is just being built up. So it makes sense. It's something I don't want to see, but it makes sense to have seen that increase there. Next, let's take a look at total assets as a whole. And total assets last quarter were $133 billion. Right now is $143 billion, about a $10 billion increase. We saw a $9 billion increase from total current assets. The other came from just long-term assets, but it was like 10 million here, 10 million there, 100 million there. It wasn't really much of a big difference to throw any red flags for me to look at it any more deeply. So next, let's take a look at this company's liability. So for first, total current liabilities right now is sitting at $94.5 billion. Just a quarter ago was 97.3. It's a decrease of about $3 billion, but to me, total current liabilities always shift up and down, pretty fluctuate. They fluctuate a lot throughout the quarters, and that part doesn't really worry me as much. The one that's actually pretty scary, in my opinion, is this long-term debt. This company has increased its long-term debt just a quarter ago. So just 3 months ago, this company ended with long-term debt of about $20 billion. Right now it's sitting at 33.7. So increase its all long-term debt by $13.7 billion. But unfortunately, its total cash and cash equivalents only grew by about $5.5 billion. So what ended up happening to the other $7 billion that it increased from that long-term debt? And again, that's pretty scary to see just that money being increased into seeing that big increase in total in long-term debt, but not end up seeing it much increase in total asset. And it's pretty much just this company burning that money right now to pay off whatever it needs to pay off. Fine, let's take a look at this company's cash flow statement. Normally, I don't look at this one too much, but I kind of really wanted to see where this company's money was going. Right now, this quarter, this company burned about $4.3 billion in cash just this quarter, compared to a positive $2.7 billion that it made in cash last year. So that's actually a difference of about $6 billion, right? So from positive 2.7 to negative 4.3 is actually a little bit higher than $6 billion difference. So where did most of the $6 billion difference come from? Well, first, the major point is this company made less money this year, about $2 billion less. Last year, this company in earnings made about $2 billion. This year on earnings, it actually lost close to $1 billion. So that's about $3 billion of that $6 billion difference. The other actually comes from accounts payable. So this company, it actually paid off a lot more money to its suppliers than it normally does. And the other one is advance and progress billing. And this company actually collected less money from its customers that their customers are paying this year compared to the same time last year. So that's where these big changes are happening. All right, so finally, we're here on seekingalpha.com, and this is pretty much how I end up valuating my companies. One of the major things I ended up doing is taking a look at annual earnings per share estimates for the upcoming 2 years and seeing what the forward PE ratio for the company is. But right now, for December 2021, this company is expected to make $10.64. Unfortunately, for this year, December of 2020, this company is actually expected to lose $1.39. But like I said, I like to look at December 2021. This company right now has a forward PE ratio of about 12.34. So now I want to see if 12.34 was actually kind of cheap, or is it what the average price for Boeing's PE ratios tends to be. So now I just want to take a look at Lazy FA, and I'm looking at the past at PE ratio for this company since 2014, 2015, 16, 17, and 18. And on average, it seems like this company has a PE ratio of about 18.5. So with the PE ratio of about 18.5, and let's estimate this company's let's estimate what I would be willing to pay for this company right now. So 10.64 times 18.5 gives this close to about $200 of stock price. So that does not mean that anything above $200 is an over expense. It just means to me right now, anything below that price level is actually pretty cheap. And I'm pretty amazed with how cheap it actually is compared to forward estimations for this company. And after taking a look at this company's total breakdown of revenue, but with the forward PE ratio of 12.34, to me this company seems a little bit cheap compared to most of the companies out there in the market. But again, there is a reason, there is risk. We don't know how long this coronavirus is going to affect the commercial world, right? We don't know if this is going to continue to drag on for the rest of the year. And if we do, how much more of a slowdown are companies going to expect? And that's one of the biggest risks coming from this company. But one thing we did see is that revenue breakdown for how this company actually collects money from different segments. And also, what did we see? A balance sheet was not complete. I don't think it was a really weak balance sheet, but to be honest, I don't think it was a strong balance sheet either. This company only has about $11 billion in cash compared to about $35 billion in long-term debt. So unfortunately, I'm not a huge fan of that, especially if we take a look at this company's cash burn. This company burned about $4.6 billion this quarter alone. So with about $11 billion in cash, this company in theory without much revenue can actually only live for 3 more quarters, right? That's just going in theory and assuming that the cash burn is going to continue with the same. Right, with the slowdown of expenses, that cash burn is going to decrease, so obviously increase the timeline of companies, and this company also has revenue from different segments. So like always, guys, I hope you guys enjoyed today's episode. Make sure to subscribe, thumbs up, and post on the comments. Let me know what you guys think of Boeing. Take care, guys, and have a good night.